G'day there. Welcome to the closing bell on the 11th of Feb. Recording this on the 10th, of course, on the Friday. And look, it's starting to get a bit more interesting. It's been pretty tough, as I said last week. I've tried to lay out all of the areas for you to focus on going forward, but really didn't make much of a statement. But this week, we are getting that sense of a bit of selling coming in, aren't we? That January rally is slowly fading. And I wanted to give you a sense of why I'm just so fascinated by the current situation and really watching it like a hawk in case it starts selling off from here. So I think it's worth just stating it for you clearly so you really get a sense of, what an important point we're at just here. So looking at the S&P 500, just want to give you that long-term sense again, going back to 1998. I look at the 20-month simple is that blue line, which is important. All of the Bollinger Bands I use are based on that 20-month moving average. So I have the 1, 2, and the 3 standard deviation Bollinger Band. I won't go into the reasons why. If you've been watching the videos, you should understand why I've got them there. What I just want to focus on is the indicator below the chart. We've also got the 10-month exponential moving average, which is the red line. So that's the faster moving average, and the slower one, that 20-month simple. And down below, I have the slope. So a calculation for the slope of the 10-month exponential. And the blue line, of course, the slope of the 20-month moving average over time. And what I want you to note is the slope of that 20-month moving average when it flips below zero. So looking at the last few times, and remember, we're looking at a lot of data here going back to 1998. And you can see that there's only 2 times where the slope of that 20-month moving average has actually turned down and crossed through zero. And have a look at what happened after that happened. So if we're just going to get a vertical line to give you a sense of what happened, you can see that after we got the confirmation of that 20-month moving average turning down, that's what we saw, 2001, 2003. And then in 2008, it turned down, and a few months later, we had the crash of 2008. And look at how good it's also been when the 20-month moving average has turned positive and the slope of it has turned up. We've had, you can see there, a nice bull market ensue. So if I just really focus in on those moments when we've got the 20-month moving average switching from trending up to basically turning and heading down, it's been pretty good in that S&P over that time, hasn't it? If we're saying this is the down period, this is the up period, this is the down period, this is the up period, and you can see this since July 2010, the slope of that 20-month moving average has never actually turned down. So it's stayed, even though we've had all these sell-offs and problems and what have you over that time period. Sorry, I stuffed that up just to follow it along. You can see even in the 2020 crash, coming very close, but not actually turning down. And this is where I want to bring you to the present moment and have a look up close at this. And what can we see? It's the first time since 2010 that the 20-month moving average slope is actually turning down. So it's decision time. And with anything like this, look, there's never anything that works 100% of the time, but just giving a sense of how interesting the current moment is, being the first time in over a decade that we've actually seen the 20-month moving average start to slope down. And the last two times we've seen it was a pretty good warning of two huge sell-offs. So the question comes into play, doesn't it? Is this a great forewarning of a much bigger sell-off that's coming? And if we go in to have a look, and I've shown you this in the past, that especially last week, I was trying to give you that sense of how important this current moment is, with the trend down on that monthly. We are sloping down. There's obviously lots of support, and I look at that 1 to 2 standard deviation Bollinger Band below that 20-month as an area where we often see a bounce if the uptrend is going to continue. So just looking at that quickly, if you hadn't seen that before, and we're seeing an uptrend, what are the areas? I'm looking at that 1 to 2 standard deviation below and saying, well, if we get reversals off that area, it's often a pretty good spot to join a much bigger trend. So this is the spot, and we are seeing that buying pressure. So, we have seen certainly an attempted bounce from an area where you'd expect to see the buying pressure. And we've seen that monthly buy pivot come into play. So the buying was strong enough to create the monthly buy pivot, that first sign that things may be turning around. But that buying pressure has come up against the very serious long-term selling pressure, where you'd expect it to turn down if we're going to continue to the downside. So we have started to see that, and now we're getting some pretty good lines in the sand from here, because it is starting to roll over. So we are seeing, like we saw here months ago, the selling pressure started to return from that 20-month moving average. Look at the sell-off that we saw. That went to the low of the move. Now we rallied back to it again. Are we going to see a similar thing? And remember, the overall structure of this is still negative. There's nothing about this that is saying that corrective downtrend is over. If we're just going to look at the waves, and I've shown you this before, but again, for new people, we're seeing those down waves. We expect to see selling pressure up in the sell zone of those down waves. So if I'm looking at the area where I expect to see, if I'm looking at the most recent down wave that we've seen, this area is where I expect to see the selling pressure if that downtrend will continue. And again, we're starting to see that. So there's lots of things coming in here saying this is where the selling pressure should be. We're starting to see it, but it hasn't really turned down. And this is where I want to go and show you where things will start to flip, where the momentum will really start to turn down, and what we need to see to switch and say, right, this is actually pretty bullish. Because the situation we're in is that we've got that monthly downtrend, but the weekly uptrend is in place. Now, which one's going to win? That's the question. And I've shown you that my line in the sand for getting more bullish, or turning a bit bullish, is that high, which is the most recent, the sort of lowest high in the downtrend of the waves to the downside, that wave that we've seen there. If it turns above there, that means that downtrend is potentially under threat. And the S&P, that is 43.27 is the high of that. So, up through 43.50, I'm switching. I think if this thing finds buying pressure and all of a sudden goes bang up through there, expect to see a really good rally, hundreds of points. So if you're getting short, that's where you're running away above there. But while this overall downward move is in place, the risk reward trade really is getting short if you get the signal, because all you have to risk, let's say, is around here, and you're out. You're wrong if it heads above that area. So that's how much you have to risk. And what is the potential downside here? Well, we're in monthly downtrend. We're retesting the long-term moving averages. Everything is saying down. So if you have another wave to the downside, I mean, you are saying that it could break the low of the whole structure. And below there, well, who knows what's going to happen? It could get quite out of hand. So a continuation of the downtrend has a lot of downside, and you really only need to risk a small amount to find out. So as far as a trader, really the risk reward trade is getting short around these levels. Now, when do you do it? Let's have a look at the weekly. So we can see here on the weekly, it is all still marching down. You can see that downward move that's happened over the last year. And again, following the 20-week moving average, and I'm looking at the Bollinger Bands again. If it's going down, I'm looking at that area, 1 to 2 standard deviation above, as the area where I'd expect to see selling pressure. Here we are again. If the downward move is going to continue, so it's in the area where I'd expect it to start getting hit. But we have the bullishness on our side. For the bulls is the weekly trend has actually turned up. And look, the last time the weekly trend turned up here, early on, you're thinking it's looking weak, but that was actually the beginning of a multi-year weekly trend to the upside. Who says that's not going to happen? We don't know. So that buying pressure is there enough to have flipped that weekly trend up. So it's very important now what it does on this selling. The selling pressure is there. I'm concerned what's going to happen if the momentum really turns down. But there should be buying pressure there. And if it does eventuate and we break out above these highs, as I've said, it's going to really take off. But let's look in and say, right, where's the weekly sell pivot if we do get that? And the range last week had a low of 4,007 in that S&P. So below 4,000 will be the confirmation of a weekly sell pivot. May not happen this week, you know more than me, if it had a bad night, but maybe it's next week. And let's say we get something like that next week, sells off, breaks below last week's low, creates the weekly sell pivot, and is then starting to look a bit dangerous. So down below 4,000 is the first point where the weekly trend will start to lose its strength a bit, and that will also be going below the 10-week moving average. But also, let's flip into the daily. And what I want you to note on this daily is this line here. That's the 200-day moving average. Very important one. So many people look at it. It's almost a self-fulfilling prophecy. So momentum often shifts dramatically once it really does break. You can see when we've been selling off, big rally, which just touched the 200-day moving average. And that was the beginning. Then it's tried to get through, couldn't quite do it, sold off again into the start of this year. And here we are, this rally, which fooled a lot of people. Look, it's broken back up above the 200-day moving average, gone up into the selling pressure. Now, if it all fails, really, it needs to break down below that 200-day moving average. And that's when it will start to accelerate to the downside. And that level is around 39.50. You can see there. So around that 4,000 to 39.50 region is where I think this sort of momentum will change from finding it difficult to go down to all of a sudden having quite large down moves, like this sort of thing. Where it's all of a sudden people getting out of the positions that they've been getting into at the start of the year, thinking that things were looking good. And also, I want you to note, this is the most recent down wave of that correction that we've been in. And the way it's rallied, you could look at this as some sort of an ABC structure where it's broken above A there. So you've got A, B, C. Now, once it fails back below A, you're starting to say, well, watch out. Could be start of that next wave down. So there's just a few things now really adding up. Also, if I just look at that, 200-day moving average, just note also where we are in relation to the Bollinger Bands, the 1 and 2 standard deviation Bollinger Bands. If it's trending down, you're expecting good selling pressure in that 1 to 2 standard deviation above area. And that's sort of where we are right now. So it is sort of that spot where you're saying, well, if we're going down, this is where the selling pressure should come in. Just as when the market's rallying, you're looking at that area, the 1 to 2 standard deviation below, and you're sort of saying, well, that's probably a good spot where some buying pressure might come in. And if it fails, boom, it really clears out once it heads back down below that 2 standard deviation Bollinger Band. Lots of stoppies can go off. So that's sort of how I see it. It's an interesting point. This is really decision time because the structure is all still saying down. We've still got the weekly uptrend to get through. We really do need to break down below that sort of area, 4,039.50, and I think then watch out. Aggressive traders are probably, thinking about the potential of that. And if you're getting short, you're definitely running away if it can break above that high, which was around 43.20, 43.30, wasn't it? So that's sort of the big picture analysis, which really affects our market. If we're looking at the ASX 200 quickly, you can see that we've had a bad day on the Friday, and this weekly chart you can see starting to look a little dangerous. The fact that it is turning down, the quick analysis of this, I've shown you before, looking at these major waves. I'm interested in that area, the buy and sell zones, as the area where I'd expect to see reversals back towards the point of control. So obviously that midpoint really important. You can see on the downside, hit that buy zone back to the midpoint. We've already had one sell-off from this sell zone back to the midpoint. And here we are, this rally, which really has surprised everyone, taken prices close to the all-time high, but still not above it yet, and is turning down, having had a little false break of that previous high from a few months ago. It's, we do still have the weekly uptrend. You've got that in your favor. There's going to be buying support on the way down, but it is just looking interesting to potentially turn down from here. And, there's a lot of work we need to do. We're much stronger than the US, of course, but if the US tips over, we will tip over. And look, I've seen this sort of thing happen before, where you've got the all-time high, races all the way back, very close to it, basically takes everyone out who was trying to get short. So people get short through here, and by now they've all been taken out of their positions, and people are getting long, getting bullish, and all of a sudden it tips over again. So it's still in that state where I'm a bit wary, and I'm getting a little bit more bearish, and I'll quickly flip if things turn up and we take out the all-time high. More than happy to get bullish, but right now I'm just a little wary of what's coming because of that big picture I showed you in the S&P. I think it's a very interesting point. We don't often have these situations where, it's twice in the last 25 years we've seen the 20-month moving average actually start trending down. So what happens next? And I just wanted to really set that out for you. So hopefully that makes sense, and I'll come back with more next week. Cheers.